Good afternoon. Thank you, Joe. So while Huey Lewis might know something about the heart and soul of rock and roll, I assure you at the end of this presentation, you'll appreciate why the suburbs is actually the real heart and soul of the Boston market. I'll briefly touch on 5 things: the market, placemaking, major moves, trends, and the 2016 headlines. But I begin with this. An extreme diverse tenant landscape does continue to thrive in the suburbs, giving rise to that urban pulse without the urban costs mentality that has developers focused on bringing more life and vibrancy to the suburbs, through which placemaking has perhaps never seen before. And as you heard from Doug Karp, in the suburbs, it does all begin with retail. And retail is a catalyst for reimagining a place and how it can be transformed. Retail is followed by residential, hotel, and office, but not necessarily in that order. Hence, mixed-use projects are the new norm. And no one, not the architect, the contractor, or the developer, will ever think of that standalone office building as sufficient. And it should come as no surprise that many of the placemaking stories we heard earlier have already taken place in the suburban market. Consider the following transformations starting from the ground up. These 3 projects have been developed with retail as the real anchor, all leading to positive office leasing. Assembly Row is fully committed for everything that's built, and Legacy Place has 0% vacancy. And on the other hand, several existing projects have begun transforming their inventory due to a number of factors, but principally tenants seeking that full-service atmosphere. These projects have successfully changed the landscape by adding retail. And the one metric that you can remember today is that the office rents achieved in these mixed-use projects are 8 to 12% more than the neighboring properties. The second point would be that the spray or shadowing of these projects on neighboring underutilized land has already started. So let me share with you a very quick example of what's happening, or what did happen about a month ago out at Legacy Place in Dedham. Legacy Place has a pad for an 85,000 square foot building, and they'd like to do 1 floor of retail and 3 floors of office. And in a proposal that recently went out to a large medical office group looking for 50,000 square feet, they limited that group to only 3,500 square feet of first floor space. The landlord wanted to retain the balance for a retailer who would gladly pay them $50 to $55 triple net for just a simple white box. While on the upper floors, they knew they only would achieve $37 to $39 triple net. Clearly, balancing occupancy is critical when putting together a mixed-use project. Don't call me an Uber, I'll walk. When major deals happen in the suburban marketplace, it's our observation that when Casey and Hayes is called to price out the job, they're only factoring in 2 to 3 miles of transportation. We know companies move because of strong balance sheets. They want a better working environment, adjacency, efficiency, vibrancy. But they don't want to disrupt an employee's commute. Consider that all of these companies moved an average of 1.5 miles from the current location. Thermo Fisher moved less than a half mile away for their new global headquarters in Waltham. TripAdvisor moved back to its hometown, Needham, from Newton. Wolverine Worldwide moved from its facility in Lexington to Waltham, less than 2 miles away. Vistaprint, the same journey, 2 miles from Lexington to Waltham. Clark's, they happened to move the farthest. They moved from Newton to Waltham, giving themselves a 13-minute drive. And lastly, Stratus. They renewed their loyalty to the town of Maynard and only moved 3 minutes up the road to Millen, Maine. The trend towards micro moves seems to indicate that urbanization is somewhat overplayed by the media. Companies do worry that a move to downtown from the suburban campus could be a significant disruption and a lifestyle change that many employees might not be willing to embrace. We think over the next 10 years, more and more companies will consider 2 campuses, a suburban and an urban presence going forward. Market stats. The 134 million square foot market had its sixth consecutive year of positive absorption with 3 million square feet of increased occupancy. Vacancy rate dropped from 18.4% to 16.5%. It's the lowest rate since 2001. And as Joe and Ron pointed out, there's not a lot to complain about. So let's set the table for what's going to happen over the next 12 months. First, rents. Class A rents will continue to increase at a faster clip than Class B product. We think they'll increase 2.5% to 3% in 2016. Construction, don't count on it. For the most part, it's not going to happen for a couple of reasons, particularly spec construction. The inventory of large blocks of space over 100,000 square feet and even over 150,000 square feet is extensive. And existing space has a huge pricing advantage. And two, the cost of construction has never been higher. In fact, the cost of construction is increasing 4 to 5% annually, which is higher than rent growth. The rents needed to justify new speculative construction are simply not there. But when you do see construction, it will be a built-to-suit for major companies that won't settle for our existing inventory. The 4 examples of the built-to-suits that I'd like to show you all had their leases signed in 2014 and 2015, but they're now taking occupancy. As you can see, these rents average in the mid-30s triple net. But in today's market, the asking rent for similar projects would be in the low to mid-40s. Let me mention mergers and consolidations. We expect 2016 to be another active year with this type of activity. And all depending upon what side you're on, it can either be a good situation or it can be a bad situation. But with Dell buying EMC, Endurance buying Constant Contact, and Medtronics acquiring Covidien, this is something to take note of. Covidien occupies 600,000 square feet in 495 South. EMC occupies close to 4 million square feet on 495 West. The question a year from now is what will those footprints look like and where are they with employment? The inner suburb vibe. Properties close to Boston will continue to have a better vibe for demand than those farther out. Those young startup companies who are not worrying about their 500 employee base, but maybe that 5 to 10 person company, will start out in Class B cool space in the shadows of Boston and Cambridge. Today, they have more and more options available for those young companies either to hang their hat or park their bike without that long-term commitment. Thus, Watertown, Brighton, Somerville, and those inner communities that have some semblance of public transportation, they will clearly be the winners. Another trend, interestingly, are that the tenants are becoming owners. We see it throughout the marketplace. Let me reference a handful. Amazon owning and building a million square foot distribution center in Fall River. eClinical buying another 193,000 square feet from EMC. The Boston Globe bought their 330,000 square foot press facility. Martinetti is building and will own their 650,000 square foot world headquarters in Taunton. And finally, Abiomed is also acquiring their 160,000 square foot headquarters in Danvers. The ones to watch in 2016, both on the tenant side and the inventory. On the product, there's always a lot happening. So whether it's the location, the sponsorship, the vacancy, and the size, those qualities will lead the headlines in 2016. I'll mention 4, Cross Point and Lowell. Anchor Line has put significant money into this asset to create a more campus environment by adding an on-site restaurant, a fitness and game center, and a large auditorium. 191 Spring Street, Boston Properties, Wolverine's former headquarters, 200,000 square feet. We are all waiting to see how Boston Properties will reinvent this property for its next phase. Normandy's Needham Crossing, an excellent example of how single-story office product is being redeveloped into a mixed use. This second phase will include apartments, hotel, and 400,000 square feet of additional office space. Shark Ninja has already committed to 150,000 square feet and will relocate from their offices in Newton. And then there's Saracen Partners and what they're doing at Mill and Main in Maynard. By adding a riverside boardwalk, a pedestrian plaza, and a new pub, within the first 2 months, they secure a new 100,000 square foot lease with Stratus, and they renew over 90,000 square feet of existing tenants. Two in particular, 115 Hartwell Avenue. It's the only spec building under construction in the entire market. It offers a very smart approach of what's happening in Cambridge, only 3 miles to the east. It shouldn't surprise anyone if this building doesn't have a letter of intent by mid-year. With King Street quoting a rent of $45 triple net relative to the $70 triple net number plus in Kendall Square, you can see why this building is getting activity. And with its size alone, take note of 200 Smith Street in Waltham, a 400,000 square foot vacant warehouse distribution postal facility that was put in place in the early 80s prior to the big dig is now available. And given its outstanding location and the spec improvements that the developers are making, this product type will be on every tenant's tour in 2016. On the tenant side, let's look at the ones to watch. Whether it's downsizing, expanding, relocating, or moving to a different market, theirs is just a sampling of companies that we keep an eye on, knowing that their decisions have potential to affect both landlords and tenants alike. But Kronos, that's the big gorilla. That's the 400,000 square foot tenant looking to find a new home. 4 months ago, they toured the market from Waltham to Bedford, but had focused in on a built-to-suit in Burlington. But when the proposal came back at a $45 triple net rent and requirements of a 15-year term, this private company that's hoping to go public hit the pause button. They went back out and looked at existing inventory. Now, with Crosspoint and Lowell, who I just mentioned, offering 350,000 square feet under one roof, and RMR offering a campus solution in multiple buildings in Chelmsford, Kronos has a decision to make. They haven't made that decision, but the rents in Lowell and Chelmsford are averaging $13 triple net. Again, it pays to have existing inventory. And although we do keep our eye on the tenants and the landlords, the real ones to watch are the next generation. The millennials have influenced our thinking about flexibility and work-family balance, but just when we thought we had it figured out, we now have to get ready for Generation Z. In 2020, they will represent 20% of the workforce. And this group will have its own set of workplace requirements, career expectations, and social awareness. The developers that we interviewed and work with on a daily basis understand that placemaking is critical to attract and retain tenants. As you heard, they speak of building a place between the buildings where those workers congregate and collaborate. So it's not about a revolution, it's about an evolution. And the suburban marketplace is the pulse of this progression. Thank you. I would now like to have my partner Kevin Phelan join me at the podium to talk about capital markets.